All righty. Good evening, everybody. Welcome to the Hurley Investments market commentary of January 6, 2025. Welcome to the 2025 year. It's exciting to hit a new year and see what opportunities are coming our way this year, and to look at the year in the past and see in retrospect how we did and what we thought of in the beginning of the year for this last year and how we handled things, and then to look towards what we're to expect for the coming year. Just to go ahead and get started with that, just a few points to organize my thoughts here. I do have the briefing year in review, and that kind of helps quite a bit. But before I bring up some of those things that it bullet points, I did want to think back what we were talking about at the beginning of last year in 2024 and what we had thought and sort of how things went. We talked a bit about how the previous year in 2023, much of the market gains had come from the Mag 7. And I'll write that. Of 2023 gains from the Mag 7. The thought was that there might be some rotation into some of the smaller stocks and other opportunities that the market might find with those. And I think it was like 80%, which it's probably, if it's not that this year, it's got to be very close. So I'll say, but the market continued with the continued, I'll say largely with the Mag 7 stocks, which gained which was again a large portion of the gains for yet another year. So in some ways we were a little off on that estimation, and here we are at another year where we consider that and think, well, is the market going to rotate out of a lot of the big tech companies, Apple, Amazon, Google, or are they going to stick with those and rotate somewhere else? And we'll get to that in a minute. I did want to continue thinking about what other things that we might have seen from last year. As I mentioned, briefing has some good points that they brought up from the last in reviewing last year. Treasury yields went up for good reason. Growth was stronger than expected. Israel war with Hamas expanded to involve Hezbollah. Russia's war with Ukraine grew with more intensity. Inflation continued. I think this is one of the bigger points. To stick above Fed's 2.0% target. It's currently at 2.4, but it dropped from 2.7 at the end of 2023. The Fed did not cut rates as much as expected, but it didn't need to because growth held up. Meaning our companies still did well. Market breadth was narrow for a good part of the year, but that was okay because the mega caps outperformed and carried the indices. Exactly what we just talked about. Those Mag 7 stocks. Stock market had a summer swoon on the unwinding of yen-based carry trades, relatively disappointing earnings from Tesla and Alphabet, Google, and talk of increased restrictions on semiconductor exports in China, but that was a buy the dip opportunity in the market that didn't allow much time this year to wait on buying the dips. And that semiconductor exports to China was a big part of our drop from Micron. I don't know why I have so many pop-ups on this one, not the other window. Micron got up to 155-ish, and we're still, excuse me, kind of peteling around 85 to 100. And if we look at NVIDIA, I want to say it got up to 180 something. This is that swoon they're talking about in July and August. Actually, let me look at the chart for a year. So I lied. They had done their stock split. I think this was probably it right here on the around the 20th of June. That kind of fell and came back up beginning of August and then fell again, and has really not been able to get over 150, but 130s is about our cost basis, somewhere in there. And once again, a big jump up to 150 today. I've got to get out of that window because it's making my computer work too hard. Micron and NVIDIA up today because of Foxconn earnings, blowing their estimates out of the water. Continue to review here. So I want to add a lot of our stocks did really well. I'll say but some held us back later in the year. That would be Baidu, Micron, Nvidia. Yes, we would have looked at a much better overall year return without this drop halfway through December. Thanks to Micron, yes, we had protection on and we made a good portion of this up with our protection, and it bounced back up, excuse me, today, but we're talking about the end of the year, not the beginning. Nvidia doesn't look quite the same, but it really kind of slowed down, went sideways for much of December. Baidu basically has stayed around that $80, between 90 and 80, and had this random bounce up to 115 in October. So why did those ones struggle, do you think? And that's a question for you guys. What can you summarize with some of those stocks? And in Micron, I would say the beginning of the year up into that midpoint looked awesome for us. And so that's maybe a caveat. But even though we've made up a lot of that downward movement from its high up at, now I got to get the high of Micron. Yeah, 155, I was correct. So even though we've made up a lot of that downward movement, it did put a damper into our earnings overall, into our returns rather. Nvidia, we thought after a stock split should really help. Why didn't they take off for us? Why did they hold us back? Tariffs. Let's see. Tariffs and China trade news is what I would summarize that up with. Which also goes into Trump's tariffs talk, which we'll come back to that. I keep spelling tariff wrong. I swear I know how to spell tariff. But I would say that kind of summarizes what our year was like and what the market's year was like. Just to look at some of these charts, man, it went up for the most part pretty steady. A drawback in April, a drawback in September. August really came a little earlier. September is usually our crap month, but this year was a little different. I liked this chart where they point out where our 50 basis point rate cut was September 29th, when things started to change. Our PE ratio from the S&P 500 up higher, which goes into and that's aggregated of all of the companies. So we're pretty high for a PE ratio, expensive market. Real GDP, 3% out of 3 out of the 4 quarters. So our gross domestic product as a country grew quite a bit. So a lot of positives to take. So what is the plan for this coming year? We have a Republican majority in our market, in our government. We have what that means for our market is lower taxes, less regulation, which will help our US companies. And that will be tax break on both corporate and individual returns, which will boost spending. Less regulation on financials like our banks will help. At least they'll help our banks. So some of the risks less regulation can give us more fraud. But DOJ, I'll say if DOJ does their job, this shouldn't be a huge problem. We haven't had a huge pullback since 2022. Kevin had mentioned since 2020, but really we had about a 20% pullback or more in 2022 when interest rates started getting hiked by our Fed. So that just means since it's been a while since a decent size negative pullback, might be hard to continue with some of these prices and continue to justify these high price to earnings ratios for our companies in the stock market. If anybody has more things they want to list, please go ahead and list them. I'm just kind of going through to save time, but please don't hesitate to give me some thoughts and ideas that you have of your own. And what I really wanted to get to or get back to was those China tariffs, and tariffs have been a huge worry, but what people don't remember is that the Trump tariffs not stared, which is kind of funny because stayed on through Biden's administration for the last 4 years. They never took those tariffs off of China. They kept them on, which is kind of funny because everybody kept saying that Trump's tariffs, if he were reelected, would cripple our economy and mess up our trade, which, you know, he did talk big on more tariffs, but the honesty is that we've had the tariffs the whole time, and our companies are at all-time highs in their earnings and in the stock market prices, all while we've been charging these tariffs from Trump's presidency. I don't know why I need to capitalize, but Trump will likely walk back the tariff talk to some degree. This is what he does. Talk big to push expectations and then walks back a bit. So everyone feels like it's not as bad as feared. That is his negotiating tactic. Talk big. Everybody moves the median expectation way too high. He comes back, walks things back and talks things back down, and he's moved the needle to a large degree, but not as much as he talked about. And that's all he meant to do in the first place, is move the needle to a good degree and used the rhetoric to push it a little bit. It's almost never 100% of the thing that he had talked about. In this case, tariffs. But we'll see what he does, but that is the latest, and that's what people are talking about now. And another reason why our market kind of got boosted to last 2 trading days, tariffs might not be as aggressive as we first thought. My thought is just to say no, duh. Questions or other thoughts that you guys have? So our investment plan going forward, Kevin will talk more about this next week as he brings in his thoughts for our price targets on our stocks for the next year. But part of that will be let's see, Micron and NVIDIA. Go back up and see us profit from all of the work we've done to dollar cost average without asking for more money. Let's see Disney. Finally get some credit, not credit, the big money making films that knocked it out of the park last year and this coming year as well. Just kind of scanning back to see if I missed anything. We will continue to stick with our process of protecting our stocks with put options so that when they fall, we have the opportunity to buy more shares for greater returns in the future. And again, much of that work has been done with with the Disneys, the Microns, the Nvidias, certainly with Baidu. But we've done all of this work, and some of the returns we were planning on and hoping for 2024 that we thought would come from Micron and Nvidia will likely come here this year. Baidu, I still think is going to have a hard time with the Trump presidency. We'll see what happens. Any good news on lesser than expected tariffs or anything like that will be a huge boost for Baidu. But again, I'll let Kevin talk about some of the individual things that we're looking at into the future. Guys, is there any other questions, comments? Where will our markets end this week? I'm going to say higher. The Dow is sideways to flat. I don't think our S&P is actually bullish yet either, technically. I'm going to say flat. NASDAQ, probably not quite bullish yet either. Where will our markets end in January? I'm saying up 2%. As we get some tax cut talk coming up and those types of things after a smaller pullback into the end of last year and smaller recovery starting the first few days of this year. I think those types of things could carry us a little higher, but since the election, we also have to remember that those things can also be priced in a bit, but they really haven't been more in detail talked about, which could be the boost for this next month. February is typically a crap down month, and what could be the downfall of some of those, what could happen in February? I'm just going to say any, once again, reevaluation of interest rate cuts. We've already been told that we're not going to quite get as many as we thought in 2025. But I wouldn't expect for that to change. But typically earnings are less than impressive on that February, that first quarter that we get here, late January and February. And that typically, you know, after a Christmas when we've made all the sales, we should get some of those, and to look forward as the market does is usually less than impressive than what has happened in the past few months. So that's what happens. Couple of earnings that aren't extremely important. ACI is Albertsons, Simple is What was SMPL? I think it was another retail or grocery, something like that. But those might be mildly important to see. We've got Delta Airlines and Walgreens. Usually the beginning of the year, just have some people's planning trips, the upcoming spring and those sort of things. Economic reports, some employment stuff, FOMC minutes on Wednesday, some oil inventories. Those kinds of things are important for inflation, more employment, initial claims, continuing claims, payrolls, average hourly earnings on Friday. These are a little more important. The unemployment rate, average work week, and consumer sentiment. Those are going to be that, and FOMC minutes will be the big things this coming week. I didn't get on the articles yet, but I will move to put those on and get this posted for you guys to check out. Was there any last questions or thoughts or anything you wanted me to go over this evening? All right, guys, quiet group tonight, and I'm sure there will be a lot more questions coming up as we get going into the year. Please join us again next week. You'll want to be there for Kevin's assessment of our stock price targets for the coming year, and a little more talk on the year before and what we're looking at for the coming year. So please join us again, and thanks for joining me, and we will see you next time. Take care.